The second Africa Tax Symposium concluded at the Victoria Serena Hotel with discussions majorly on tax treaty abuse dominating the tax practitioners, authorities from across Africa, Europe, and aggressive tax planners engaging on current tax instruments trending on the continent. Professor Saul Piochoto, a speaker at the symposium, described tax treaty abuse as a structuring by multinationals to evade taxes by creating subsidiaries in non-productive areas and taking advantage of low percentages or sometimes no tax at all.
Abusive tax practices or aggressive tax practices, I would say, are when companies create multinational enterprise. This is in relation to multinational companies. When they create complex legal structures which are really aimed at minimizing or reducing their overall taxes. Obviously, multinational enterprises operate in a number of different countries, so there are good reasons for them to have separate subsidiaries in different countries. But what one sees is they then create much more elaborate structures where they locate different subsidiaries in countries where they have no real activities, and they simply use those as artificial entities, often with no employees, simply to pass money through, through financial and tax engineering to reduce their taxes. And I think that constitutes abuse of tax treaty provisions and aggressive tax planning.
The current growing trend of multinationals hiring tax legal experts to treaty shop is a growing trend, with most speakers at the conference placing high hopes in the BEPS project, an international tax standard which will assist developing and emerging economies keep taxes that belong to them. Currently, multinationals such as MTN Uganda are in a tax dispute on whether to remit taxes to Uganda or their parent country, South Africa. Yet Uganda appears to make more profits compared to other subsidiaries. Professor Piochoto is now urging MTN to push Uganda government to create free and fair tax regulations that would end future disputes.
And what in Uganda from the actual operations. And as I say, the international tax rules don't really resolve that in a very clear way. So from some points of view, companies like MTN are kind of caught in the middle. But on the other hand, I would urge companies like MTN really to push the government to reform the tax rules so that they're clearer and fairer. Unfortunately, the tax rules at the moment are not sufficiently clear and fair.
Ruth Sebatindira, former Uganda law president, made a presentation showcasing multinational disputes between URA and Zain in the past that have proved difficult to solve whenever other multinationals buy them off. The argument has been how much they should pay on their acquisition. Other examples included tallow and heritage cases that were determined in the UK in favor of Uganda Revenue Authority. The ESC around the corner, Professor Piochoto, has advised the East African community to create a tax treaty that would enable strong economies share the revenue with weaker nations.
There's always concerns in creating a common market whether the benefits are equally shared amongst the participating countries. Once you have a common market, that enables a foreign company to locate in any one of the countries and have access to the whole market. Now, if you do that, clearly the company is benefiting from access to the whole market, but not all the countries are benefiting from employment, for example. If a country is established in Kenya, for example, but has access to Uganda, Tanzania, Rwanda, the other East African community countries.
As many African countries and tax officials continue to widen the tax base, the symposium made it much more apparent for the need to embark on capacity building. As many African countries and tax officials continue to widen the tax base, the symposium made it more apparent for the need to embark on capacity building and involving tax authorities when governments are negotiating future tax agreements, rather than Ministry of Foreign Affairs officials who have no clue. To encourage tax professionals to improve, Belema Oforibo, the director, IBFD, and the organizer of the event, is looking forward to awarding 2 master's scholarships to outstanding African tax experts in the Netherlands. Channel 44 Business.